PMI data. But Ajay Bodke of Prabhudas, Lilladher and Chandan Taparia of Anand Rathi Securities join in to tell us what we should expect this morning. Ajay, morning, let me start off with you. It's been a rude check for our markets, you know, the way the PSU banks came out with numbers last week, and then ICICI Bank showcased stress in its loans as well. How would you approach the banking pocket now? Would you use every dip as a buying opportunity, or now would you start to get cautious given that earnings are not picking up?
I think overall, insofar as markets are concerned, in the middle of last week when the markets were at 8,900, I had expressed concern that the Sensex juggernaut looks likely to halt in the short term, because we were at that point in time trading at 13% premium to the last 10 years, 1 year forward Nifty. We have seen a 100-point correction in Nifty from there, but even today we are trading at 11.3% premium to last 10 years average, which is at 15.2, and today we are trading at around 17 times with 516 rupees of Nifty earnings exactly a year from now. I think there's still around 2 to 3% correction to happen, and global cues continue sort of to drag us down. So I feel that the banking sector in particular, to answer your question, clearly seems to be the weakest spot in the market. And if the last 1 month, if you see, it was the banking sector in general and PSU bank in particular that had propelled the rally, and that is turning out to be the weak point, because the results of 3 PSU banks, Union Bank, Bank of Baroda, as well as OBC, continue to show the continued stress on the assets, and the commentary coming from the managements, be it private sector or public sector, continues to indicate that it will be a good 2 quarters before one can start expecting some relief on the restructured assets and the NPAs front. Let's not forget that for the system as a whole, the total NPAs are touching around 5%. If you add around 6 or 7% of restructured assets, we are looking at around 12% of the total stressed assets put together. So I think it's a situation which will need, in my opinion, a surgical intervention from the policymakers, to tackle the bad asset problems. And unless there is the banking sector improves, I think it will raise questions about the revival investment cycle.
Okay, Ajay, actually a bunch of numbers that came out over the weekend were not really anything to write home about. I mean, if you looked at Ashoka Buildcon, Usha Martin, Grasim, Engineers India, a lot of the economy exposed stocks have shown deep holes. So what will you buy now? What are you asking your clients to buy?
I think I would still be placing store on the fact that we are entering an environment in which inflation has bottomed out. Accommodative policy stance has been adopted by RBI. We are expecting hopefully a rate cut, if not tomorrow, most certainly I think in the next meeting or even post-budget, in between the 2 meetings, because the government is committed to ensure that the fiscal deficit does not move beyond 4.1%, and the medium-term fiscal consolidation roadmap is adhered to, i.e. 3.6% next year and 3% a year later. So from the macroeconomic perspective, the currency has stabilized. We are seeing problems galore all across insofar as our competing destinations for capital are concerned, be it other commodity exporting economies or even some of the developed markets. So from the medium-term perspective, I think the India story continues to look extremely strong, and we have a government that's proactive, and we have seen that in terms of the coal auctions being announced. So I'm not worried about the medium-term up move. I'm very certain that the markets will bounce back after coming out of this very short-term flutter that we are entering into. But insofar as investment-linked stocks are concerned, I would be looking at them on every dip, because I still believe that a quarter or 2 down the line, we will see sort of, the investment cycle revival, because we talked to a lot of...
Which ones, Ajay?
Yeah, I think Larsen & Toubro is the company that we are very positive on. We also are very positive on Cummins India, and also sort of, a company like Crompton Greaves. So these are the companies in the capital goods sector that we'll advocate investors to look at from the medium-term perspective, for the simple reason that the demand for all the 3 companies that I mentioned comes from multiple process industries, and they're not reliant on only one sector like a road sector or say process industries like a cement or steel to do well. But the multiple drivers for these businesses, and as interest rates start coming down, and some of the policy hiccups get addressed by the government, we will start seeing fresh capital investments, greenfield projects sort of taking off, and some of the hitches that are dogging the brownfield expansions also being taken care of. So we need sort of to watch these companies, which are also leaders in their own subsectors, for investors with a medium-term perspective.
Okay. Chandan Taparia of Anand Rathi is also with us. Chandan, first, I know you have a lot of stock-specific ideas, but first, if you could tell us about your Nifty strategy, what would that be?
Good morning, Sonia. We have seen decent run-up in the last series as Nifty and Bank Nifty rallied by around 10%. We have seen the strong FIs flow as FI have bought more than 13,000 crore in last 10 trading session in the cash segment. We have seen the rollover of 78%, which is comparatively better from the last 6-month average. But now we are getting concern and the cautious view from all other database. The put-call ratio has fell down from 0.96 to 0.90 levels. FIs are continuously buying, but the roll cost is now declining. We have seen the lower roll cost even after the better rollover. We are finding hurdle near to the supply trend line, and this supply trend line is working from last 8 months. And the supply trend line started its move from 75, 63, and after the May election result, and then connecting the tops of 79, 78, 700 levels. Now resistance comes near to the 9,000 levels. Also, we are observing the strong bounce back or strong jump in the volatility index as it moved by 40% in the last series from 15 to 21. So now the volatility index, fresh call writing at the 9,000 strike, hurdle near to the supply trend line are now turning us to take the cautious view on the market. Now Nifty has to hold about 9,000, otherwise it may stuck in the range of 8,500 to 9,000 levels. So we are suggesting to go for the bear put spread, reduce the long position. On immediate basis, we are looking at the support near to the 87.70, and below that Nifty can go to 86.26 and the 8,500 levels.
Okay, that's a little deep. 86.26. If 8770 is taken, and that's not a long way at all. Let me look at some individual stock strategies that you have. You have a buy on Apollo Tyres. We just heard that from Sudarshan as well, but what's your strategy?
Yes, Lata, we are turning cautious on the market as it has rallied by more than 40% in last 1 year, but still we expect that this is the bull market and the mid-cap stocks likely to perform. In the last series, we have seen the strong buying interest from the FIs, and heavyweight stock started up move, but now we are expecting that mid cap and the small counter may continue their movement. Apollo Tyre we are selecting as is moving after the consolidation of last 3 series. Earlier it was finding hurdle near to the 243. On Friday when Nifty fell down, the stock crossed and closed above its hurdle of 243 and now all set to move towards 260 on the higher side. We are expecting the higher volatility. We have major events like the RBI policy, GDP data estimation, IIP data and the budget in the series. So we are turning a bit cautious and trading on the option and the option strategy to play the safe with the limited risk. So here suggesting the bull call spread, buy 240 call and sell 260 call. In the entire study, the risk would be around 8 points. And as per the view, if the stock moves to 260 levels, then we'll get profit near to the 24,000 rupees.
Ajay, what do you do with your investments in the paint stocks now? I mean, a lot of people have accumulated paint companies, but the results from Berger and Asian Paints indicate weakness. Would you take some money off the table there?
I think I certainly would, because our analyst has a reduce on Asian Paints, because the belief in-house is that most of the positives insofar as sharp plunge in raw material costs which are linked to crude and even otherwise have been priced in by the market, and the sheer valuations, the sheer premium that the valuations today some of these stocks enjoy, in our opinion, leave some vulnerability in case I think the raw materials were to reverse even slightly. So from that perspective, I would say they are fairly valued. And one can sort of think of taking some money off the table.
Actually, we have a bunch of IT questions as well for you, Ajay, but I think it's better we take a break now. Okay, we have Chandan and Ajay with us, but it's almost pre-opening time. There it is. Nifty starting with 0.5%, 1/3% down. Sensex is still almost flat to mildly in the green. So let's wait by and see how things are panning out. It's not showing as if all hell has broken loose at this point in time. Maybe we want to pull up the SGX Nifty as well. At the moment, okay, a mild red tick coming in. We haven't yet got the rupee rate. That, of course, will be a traded rate. So it'll be interesting to see 61.86. Almost everyone I spoke to expected that it would open over 62. But the rupee won't weaken much. The fourth quarter is typically such an export surplus quarter that we shouldn't really worry about. And then our crude bill is halved. So we are going to see the rupee finding support. Okay, it's not quite started at 62, but almost there, 61.99. That's as expensive as the dollar has got. But that is the inherent strength of the currency, which can be, of course, a weakness for the economy. The Sensex and the Nifty are now showing deeper cuts, almost 0.5% for the Sensex, and I will take that a little seriously. It's just that at the moment, the rates are a bit all over the place. I mean, I could read them out to you, but, you know, Aurobindo starting with 8% cut, Hindustan Unilever 5% down. It's not making sense. Coal India is down 2%. Maybe we should take that seriously. Berger Paint starts 2% lower. That also should be taken seriously. But I think it will be a good idea to wait a little and then get to these numbers. Tech Mahindra starts 5% higher. That's important. Adani Enterprises starts 3% higher. Those are the stocks that our research team told you will be on their radar and should be on yours. But I think we'll revisit the prices afterwards. Chandan, take us through the other strategies that you have. You have a strategy on buy strategy on Relcamp and Arvind.
Yes, Reliance Capital is making the best formation. This stock is now showing early sign of bottom out formation. It is moving after the consolidation of last 16 trading session. We are expecting a strong short covering in the counter as by its nature and the derivatives data. So here we are suggesting to go for the bull call spread, buy 500 call and sell 520 call. In the entire strategy, risk would be around 7 points. That is the 3,500 rupees per strategy. And as per the view, if a stock moves to a 520, then we'll get profit of around 6,500. So 1:2 risk reward ratio, and this stock is now showing some sign of the bounce back move towards 520, 525 levels as per its price nature.
Okay. Ajay, I wanted to ask you about the IT stocks. Tech Mahindra, HCL Tech, both of them surprised with good numbers. What would you play in that space, if at all?
I think Infosys and Tech Mahindra, among the large cap space, continue to be our favored picks. In the mid cap space, Hexaware and KPIT are the two stocks that our analyst is most bullish on with a medium term perspective. I think the demand environment in US and UK, the two largest markets, continues to surprise us positively, and our interaction with the IT companies indicates that FY16 would certainly be better insofar as volume growth is concerned and also pricing is concerned. That sort of reinforces our positive stance in the IT companies, and these four companies, we believe, in the medium term will offer very good value for investors.
All right, the other stock that's moving...
numbers, Sonia?
Yes, about 9.5 crores of profits versus a loss of 3.7 crores. So that's a good turnaround. The income as well has gone up substantially for the company at 103 crores versus 31.6 crores. So Titagarh Wagons could be higher in trade today. Of course, will be higher because of a good set of numbers. We'll wait by for the fine print. But apart from that, the other stock that's moving up is Adani Enterprises after that big move on Friday. Ajay, I wanted your views on this. This is a positive for Adani Enterprises shareholders, of course, the plan to simplify the holding structure. But what do you do with that stock now? Do you continue to accumulate? And what would the target price be in your mind?
Yeah, unfortunately, we don't cover Adani Enterprises, so it would be inappropriate for me to comment.
Fair enough. The other stock then I want to ask you about is Coal India. That stake sale got fully subscribed, but now there is an expectation that perhaps there would be another 5% stake sale over there. But for a Coal India investor, what do you do now?
I think this overhang obviously would make me cautious for any new entry into Coal India. And I would also wait for sort of the entire coal auctioning process to get over before committing myself to Coal India.
Okay. Actually, let's wind up on that note. Ajay and Chandan, thank you very much for taking us through your investment and your trading strategies. We